Today I'm joined by Nick Harris, Morgan's Telecommunications Analyst. Nick, the reporting season's just finished. How did you see it?
I guess it was quite a mixed bag reporting season this time round. I guess if we talk about Telstra a little bit, because it's always topical and certainly one well held by our clients, and then maybe we can talk about some of the more exciting ones. Telstra was a pretty tough outcome, and I think the outlook for them remains quite difficult. If you look, they did still actually add customers, so added around 300,000 mobile customers versus this time last year, and something like 30,000 fixed. So it was a really good result, but that momentum is slowing right down, and I think that's the key thing going forward. It's going to be increasingly competitive. It's as simple as that. So despite Telstra being in a really sound position, we're going to see a couple of tough years ahead as they work through both increased competition in the mobile space with Vodafone and Optus basically finally getting their act together, and then secondly, increasing competition around the NBN. So the Telstra result was okay, but certainly nothing to get excited about. It did result in us pulling our dividend flat, so we're expecting a flat dividend now for the next few years as they work through this. So I suppose that was a little bit disappointing. We had hoped they'd have a little bit of surplus capital to just grow that dividend, but have basically assumed they're going to invest as much spare money as they've got into growing the core franchise or building out the mobile network. So that was Telstra. It was a bit of a tough one.
So what were the companies that were more exciting and have better growth prospects?
Two really exciting companies. First Speedcast, second NextDC. Two quite different stories. NextDC, company Morgan's floated on the stock exchange maybe 6 years ago, and it's finally really hit its straps now. They've got 5 data centres around Australia and 3 more coming online. I think the important thing from its result was that if you double the first half number, you're going to hit the top end of their guidance. So I think there's no doubt they're going to hit their numbers for the year. You've got new facilities coming online in Brisbane and Melbourne in the next couple of months. So it's pretty exciting times for them. And then about another 6 months later, towards the end of this year, we've got their Sydney facility coming online. So we've seen really strong revenue and earnings growth out of that business. We've seen them starting to bring some new facilities online, and they're well funded. So I think that's a great story, and it's one that in our sector actually re-rated the most in reporting season just by simply telling us what they'd already told us, which is the outlook's pretty good, and they've got some very strong tailwinds supporting that and good management delivering some really impressive results. The second one that was interesting, probably almost the opposite end of the spectrum, more of a contrarian play, is a company called Speedcast, a satellite company which is in our high conviction picks. We knew it was going to be a messy result, and it was a messy result. A number of one-offs, currency, all these bits and pieces that sometimes you see a lot of. But I think the important thing for them is last year was a really tough year. They got a little bit of organic growth, but probably not much. Quite hard to work it out, to be honest, because they've done a lot of acquisitions. But the exciting thing for Speedcast is that in the year ahead, they're basically getting about 50% earnings growth through an acquisition. They just really need to bed that down and deliver some clean results, and we think there's a very strong opportunity for a re-rating that stock on the back of clean results. And secondly, the fact that they've raised almost the equivalent of their market cap in the last 12 months to fund some of these acquisitions. So we just need to see all of that stock find a home and the liquidity settle down. So Speedcast, our number one pick, heading out of reporting season, and NextDC, number 2.
Great. For clients' portfolios, the more conservative investor, where do they put their money? And for the more aggressive investor, where should they put their money?
Ultimately depends what you're looking for. If you're looking for a stable dividend, we're still happy with Telstra. If you're looking for earnings growth, though, we're not. We think they're going to be battling for a little while. So it really depends what you're looking for. But as I said, if you're looking for income, Telstra we think is still fine. We expect a lot of noise and I guess volatility around Telstra and around that sector in general as well. I didn't really touch on it, but Vocus reported a result, the 4th largest telco in Australia. TPG reports their result in a couple of weeks as well. We think that whole sector is really tough. Just more and more competition, margins under pressure from the NBN, and it's really going to be a battle for people trying to get and keep customers. So we don't think you really need to be there. I don't think there's a rush in that space. So happy to steer clear of that. The ones that we think, if you're a little bit more aggressive, Speedcast is one where I do think there's very good upside in the next sort of 12 months, maybe even the next 6 months, just on the back of them reporting a clean set of results that shows strong earnings growth. And then secondly, NextDC, which we think is probably in the middle kind of risk profile, where the business is generating strong cash. It's 100% organic, which we like. They're not buying stuff. It's all about building out their own data centres and growing that footprint into very strong demand. So I guess if you looked at it from a risk perspective, at the lowest end of town, you've got Telstra with not much risk but not much reward. Speedcast, more risk but a high reward, we believe, and NextDC right in the middle.
Great. Okay, we might leave the conversation there. I've been talking with Nick Harris, who's Morgan's Telecommunications Analyst. Thanks, Nick.
Thank you very much, Scott.